Hello guys, and welcome back to this channel, and in this video we're going to speak about how you can get better returns in growth stocks than Cathie Wood and her ARK invest. So if you like this video, make sure you hit the thumbs up and subscribe to this channel. This is a very new channel and I would love to hear your feedback and your comments. So all feedback is much appreciated. So what is wrong with Cathie Wood's? Basically nothing. The only thing that I don't like with her investing is that you give over all the control to her, and everybody knows that she was a semi-famous person who betted very big on Tesla, and then in 2020 with the meteoric rise of Tesla, her fund ended up producing 140%, and then a lot of people have invested in her fund, and since then the fund has been going down, and now almost all of her investments are 60% down. She, on the other hand, keeps telling people to have a 5-year time horizon, meaning you shouldn't worry about you being down 60% because you look into the future and in 4 years from now, you're going to make back this money. But how do you know this? I myself don't believe in this, and I believe in a technical, more of a technical trading strategy. I'm testing out many different strategies. But I do believe that you have to have a cut loss, because what if she's wrong? I mean, at least never invest 100% of your money with her, because I mean, what if she's wrong? You're already 60% down with your money, while the S&P 500 that would take you no research, no brains, you just buy an S&P 500 fund, would have produced plus 20%. So that's an 80% difference. Okay, so I don't want to waste your time. This strategy that I'm going to show you is the strategy that I have been using. I'm going to be very transparent about this. I have, the way I have tested this strategy is I paper traded it for about 1 year. Then I traded it on the real stock market with fantastic success. And I'm going to share this with you. I have gotten about a 30% annualized return. And then I got destroyed in January. I will be very transparent about this, which means that there is points to optimize with this strategy, or at the least it's I mean, we basically had a bear market in January, so everybody is down and everybody feels the pain, and I'm down. I'm still less down than Cathie Wood's, right? So if you're not into technical investing, then this is not the video for you. But if you are and you like this kind of stuff, then welcome here. Make sure you subscribe to the channel. And I want to show you the strategy, because this strategy is extremely good at picking when these stocks are going to blow up, and it's also extremely good at getting out of the stocks when they basically stop the uptrend. And this is where I think it beats Cathie Wood's, because I'm not taking any risk. I'm in the upswing, and the moment it is not in the upswing, I sell. If it doesn't go my way, I'm wrong, I just sell and get out, and I will never be 60% down like Cathie Wood's this year. So let's go over to my computer so I can show you the strategy. Okay, so at first I want to show you the basic theory of the strategy, why it works, and then I want to show you a few examples of what it looks like when it worked really well and what it looks like when it didn't work really well. And then I'm going to show you my actual live portfolio trades, and I want to show you my win rate and what's the average loss and what's the average gain. So I hope you get a lot of value out of it, and please let me know in the comments what you think, or if you think you could improve on the strategy and how you would improve on the strategy. So the basic theory of this strategy is very, very crazy simple. It's basically built on momentum, like trying to catch a momentum in a stock, support and resistance lines, and an uptrend. So the theory is that sometimes you have situations in a stock when the stock, this is Moderna stock, and when you start hitting a resistance. So you can see here that this resistance was touched once, twice, 3 times. So, and the stock also previously has never been at this level. So this means that if the stock breaks over this point, there is not another known resistance line. So basically the stock could go to the moon, because there isn't any point where, for example, if you would be buying here, then it would be very likely that you have to take profits when the stock goes back to this point, because you know that this is a coming resistance, right? So we want to line up the odds in our way. And when you buy here and the stock breaks through here to a highest ever point, then there is no known resistance line, right? So there is a very high chance that the stock can just really blow up and go in a very fast uptrend. So how do you know? So basically what you want to do in the strategy is stay in the stock while it's in the uptrend. So what is an uptrend? An uptrend is a series of higher highs and higher lows. So let me show that to you here. So for example, you have a high here, and then you have a low here. Then you have a high here, which is a lower high. Maybe this is not the best example. Let me go here. So here is a very good example. So here you have a new high. Then the stock goes low, but it doesn't go as low as the last low. Then the stock goes higher, and this high is higher than this high. And then it goes low again, but this low is higher than that low, which is higher than that low. So you can see that you have these levels of high, low, higher, high, higher, low, higher, high, higher, low. So the point is that as long as the stock is producing higher highs and higher lows, you're in an uptrend. But the moment the stock starts to have lower lows, you're no longer in the same uptrend, and that is time to get out. So what you're hoping with this strategy is basically to catch such an upswing. And unfortunately, this I only did on paper, but this was, I want to show you the best trade, and then I want to show you like bad trades that happen, so you know also what happens on the other end. So the theory is that when you buy here, you can win this, right? But so that's your potential profit. But if it goes the other way, what are you gonna lose? You know that, okay, if it goes a few percent down here, it was not what you thought it was, then you sell, no hard feelings, and then you go into another stock where you feel that the same thing is going to happen, right? And look how nice it happens. So basically you would have bought here at about 190, and then within this is also a longer term strategy. I really like it because you check your stocks once a day at the end of the trading day, and most of the time you don't need to do anything if the trades are going your way. And look here, you would have been sitting from June to October, 4 months in the same stock, and you would have gotten from 187 to 350. What is that? That is a comfortable 88% return in 4 months, right? I mean, granted, this was the best trade in this time that we took. Still, just wanted to show you. And look what happened. Here you have a higher high, then you have a higher low, then you have a lower high, but you didn't have a lower low, so that you're still Gucci here, okay? So then you went to a new higher high, okay, so far so good. Then here you have a new low, and then this starts breaking down and it goes even lower than this low. So now you know that, okay, the uptrend that you were in doesn't exist anymore. So you sell, you take your profits, and then look what happened to the stock after. So you have to know that with this strategy, and I don't think there is a strategy where you will be able to snipe the bottom and snipe the top. So you could have won more than 88%, right? But the point is, how do you know when to get out? So you will never get out at the top, but you will get out close to the top. And this is like sort of an insurance that it's the cost of doing business. Don't cry over spilled milk. So now I want to show you what happens on not so good trades. So for example, this was a trade that we also took on paper. So I also have to tell you that the more the resistance line is clear. Like for example, the Moderna one was touched 3 times. It was a very clear. You could have asked my 4-year-old daughter, and she could have told you that that's a resistance line. This one was not as good, right? The trend of the stock was really, really good, but this one, like it was touched 1 time. This is actually not a very good entry, but it did go on a new high, but then it didn't go our way. So then in the end we sold at this point because we took, what was it? This was a 9% loss. So you see, like when we're right, then we win quite big. When we're wrong, then we lose a little. So this makes it that you can be wrong even more times than you're right, and you will still make money overall with this strategy, right? Okay, so what makes this strategy better is the more obvious the resistance line that you find, the better, and the higher the volume on the breakout, the better. So for example, here you see it's a very, very obvious resistance line. The stock in itself is a very, very nice uptrend, and the stock has to go on a higher high. So this strategy will not work if the general trend of the stock is not an uptrend. So basically you have to call in your 5-year-old daughter or your grandma and ask them, is this stock going up? And they're like, yeah, it looks like this. Those are the stocks that you can do this strategy on, and then you will make money. Don't try to do this strategy on let's say, for example, let's look at Ford. So you see, like for example, it will most probably not work on the stock because this is not an uptrending momentum stock. So the more the stock looks like this, the better. The more points that the resistance is hit, the better. The higher the volume on the breakout, the better. And then you just follow for higher highs, higher lows, and then the moment you have a lower low than the other one, you sell. And so as I promised, I'm actually going to show you the portfolio, and here it is. So these are my live trades. If you want, you can comment and send me your email address, and then I can show you these trades so that you can check them out. But this is all my live trades. You see, what I like with the strategy is it's not like I'm day trading. It's not that active. I don't have to be stuck to the stock market. It's like I check the stock market once a day. And then basically you see when I win, on average I have won 11%, and when I lost on average 5%. And you see sometimes you have very nice gains. And for example, this trade was from July to September in 2 months. So sometimes you have very, very nice gains, and here and there you have big losses. This was within a few days. And overall, I'm more right than wrong, and I make a lot of money. There's a big downside, however, to this strategy, and that is that it doesn't work in a down market. So I seriously need to optimize, and I'm going to share with you guys how this will be. Most probably, the way that this will be hedged against is I will run a parallel strategy with this one. So the portfolio will not be 100% in the strategy. It will be, let's say, 50% in the strategy. And then I will have another strategy that is working better on the short side. So when this strategy is not shining, then the other strategy will be making money. I do believe that this setback that we had in January is very temporary, and this will all come up. But I on this channel, I will always be transparent with you. And you see, in January, it was just horrible. It was a devastation. The only thing that I made money on was, funny enough, Tesla. And it was not even really per the strategy. I was so pissed that I basically just traded. I broke my own strategy. Never do that. And if you count in this January month, you see the interesting thing is that the stops, the general loss, it didn't increase. So this I'm very happy with. However, the win rate, the strike rate of the strategy went down to 41%, which makes it a not good strategy. So when the market is falling, this is not a good strategy. But come on, this was the worst January since, I don't know, since like 2000, from what I heard, or maybe ever. So it's not okay to expect that this strategy would work really good in this market, and I'm going to optimize on it. But I just wanted to share this strategy with you. I believe it's better than investing into Cathie Wood's ETF and letting go of the control on your own money. Please let me know what you think, and I'll see you in the next video. Bye bye.